What is up, everybody? Solomon here. Super excited to be with Genfinity down at Hello Future Live, covering all aspects of the Hedera ecosystem and the physical event. Tons of community down here. Very, very excited to have co-founder of Hedera, co-CEO of Swirlds Labs, the man, the myth, the legend himself, Mance Harmon. Mance, there's been an abundance of recent milestones and achievements within the Hedera ecosystem, especially over this past year. I can think of Drop being integrated into the FedNow Service Provider Showcase. We can think about MTech and the work that they're doing. All of that being said, I would love to hear kind of your thought process around some of the overarching themes that we're seeing, whether it be tokenization or what that looks like. And from the banking purview, or maybe touch base on the themes first, and then I might follow up a little bit.
Well, from the very beginning, we've had as a thesis that real adoption, widespread adoption, would occur when the existing large-scale enterprise solutions, systems that most giant businesses run their businesses on, once the crypto industry starts integrating with those, then we just sort of get woven into the fabric of everything that has been Web 2, and it migrates from Web 2 to Web 3. And what's interesting is that we're beginning to see that sort of thing happen. You can point at some of the financial use cases and the organizations, the companies that have gone to market with their solutions are now having serious conversations with the financial services I hesitate to call them fintech because fintech sort of implies startup or small, medium-sized, but these are giant organizations that are providing the equivalent of ERP solutions for the banking and credit union industry. When these systems that are built on top of us, modern Web3 sort of crypto-based solutions or DLT-based solutions are integrated with those existing systems, then it becomes possible for the existing banks and credit unions out there to flip a switch and turn it on, right? That is the path to mainstream adoption in one category, just the finance piece, right? Just the banking piece. And you see that sort of thing happening, not just in the world of banking, but across the board.
100%, and I think that is massive. I mean, I know that you can think of like Jack Henry or Fidelity Information Services and the way that they tie into the traditional infrastructure. When it comes to one of the aspects that we all kind of have seen be a pitfall to adoption in the space is like, the security aspects, custodying your own assets. Can you touch base a little bit about on what Lehman and you guys are working on with DREC, Decentralized Recovery and Storage?
Sure. Well, so DREC is, I guess it's part of another sort of larger theme. To start, DREC makes it possible for people that have wallet software on their phones or computers to be able to recover their keys in a decentralized and secure way. In other words, it's still self-custody, but it's safe self-custody because there is a network of helpers out there that have a slice of the key, a piece of the key, and it's all automated in such a way that it's seamless and transparent to the end user, the person that actually owns the wallet. You lose your phone, don't worry, there's a safety net, right? And all of our major systems today, we assume there's a safety net. It's not true in the world of crypto today. You lose your keys, you can be devastated. And so DREC is building that safety net that needs to be there for the industry as a whole. Now, the larger theme is a theme of removing friction to adoption, right? And DREC is one example of something that we, Swirlds Labs, are doing to remove friction to adoption and mainstreaming the industry. And the Stablecoin Studio is another example of that, right? We just announced Stablecoin Studio not too long ago, a few weeks ago, and it makes it possible for those that are interested in building stablecoins or going to market with stablecoins, instead of it taking them months to have the tech solution in place and do that, now they can do it in a day. Right? That is where the exciting new work is being done, and it's all the same thing. How do we remove friction from the industry to help the industry move forward more quickly? How do we accelerate adoption by removing friction?
I think that's another trend that's pretty interesting that we don't hear a lot of people talking about right now, but I can think of the USDC and Circle and how, the proof of reserves aspect and how it might not even have to be a central bank digital currency, but thinking about bank deposit-backed stablecoins and all the aspects there, can you just maybe briefly touch on that? Do you think that that trend is going to continue?
I do. I think it's going to continue. I think that Europe is ahead of us, the United States.
Mika.
Exactly. I mean, they're sort of embracing, right now it's really interesting to see what's happening across jurisdictions. You know, the picture has changed from the very beginning to where it is now, and there's been jurisdiction arbitrage, so to speak, by startups and people in the industry. But I think that we're making progress, and again, it's fascinating to watch the same signs of seeing those providers of infrastructure, current sort of Web 2 providers of banking solution infrastructure to the banking industry, now being interested in helping to bridge from Web 2.0 to Web 3. The same thing is happening more generally. And these are just, these topics that you raise are just you know, symptoms or indicators, if you will, of that maturing. And more than that, it's a willingness to really embrace crypto in a way that they hadn't before, right? Everyone knows that it's here to stay. And there have been a lot of experiments over the past decade. And now it's becoming real. And people are building, you know, big organizations are building real solutions that are going to change the way that we do finance.
Thank you so much for that.
You know, one more thing. I'll just say one more thing about that. What I think is interesting is that when we think about DeFi and all the startups in the crypto industry, the platforms that exist, they're important. They're important platforms, and they're realizing value. But I think on the path to sort of adoption and normalization, you know, integration into the existing financial system, I think the legacy systems and organizations are going to actually be the first ones to really realize the mainstream revenue and the mainstream adoption of that. And then subsequently, what they'll end up doing is integrating, or maybe as a part of this process, they'll integrate those early DeFi platforms, and there'll be consolidation. But you know, I think that it's likely that the early movers here have shown the way, and now the existing players are going to adopt and integrate and expand, and there'll be consolidation resulting from that.
Yeah, we certainly know there's a lot of eyes on this space from the traditional standpoint, and almost like measuring what works, what might not work, figuring out how to plug and play those things into their own systems, and or integrate those things into their systems. So given that this is Hello Future Live and a community-driven event, I've also asked and polled the community for a good number of questions here, so I'm just kind of do something a little bit different.
Sure.
Give a shout out here to Kevin Cage. Kevin asks, with increasing regulatory scrutiny on digital assets and distributed ledgers, how is Hedera positioning to be as compliant as possible while there's still, especially in the United States, a little bit of a lack of clarity?
Well, you know, the interesting thing about that is it kind of, the question assumes that we're now making changes to be compliant because things have gotten hot from a regulatory perspective.
Sure.
The reality is you've got to make those decisions up front, right? It's hard to not be compliant in a project or not care about compliance in a project and then sort of change your stripes along the way. That's really difficult. And so we knew from the beginning that compliance was going to be incredibly important. You know, way back when we started everything, our peers recommended that we not be domiciled in the United States, that we choose a different jurisdiction outside of the United States. We took exactly the opposite approach in 2017.
Yep.
Right? And so we're domiciled in the US. We've had ongoing conversations over time with various agencies and regulators. We have a good reputation within the industry, a reputation as being the compliant organization within the industry. We sacrificed early quick gains for the ability to be where we are today from a regulatory perspective. So when we started all this, we said we're going to build a 100-year company, 100 organization. And if you're serious about that, then the decisions you make early on often look very different than if it's not the case. And it was the case for us, and now we sit in a good spot because we had that perspective from the beginning. We're not changing anything, right? We're there. And now we have a big compliance group at Hedera, and we've got a government relations group at Hedera, and so they're very engaged with the appropriate people and organizations in DC and the United States specifically, but globally as well. And so I'm very happy with where Hedera sits today.
Kevin also asked, are there any upcoming features or applications, or maybe current features and applications within the Hedera ecosystem that you believe will be game changers for the network or for the space as a whole?
Yeah, so we sort of already touched on
Sure.
this. I mean, at this point, we have the broad strokes down in terms of what the features are for Hedera. And what we're in the process of doing is looking, we call them accelerators. Internal to the company, we would say, what are the accelerators that we need to be building that make it possible for the developers to build out full solutions in a shorter amount of time? Where can we remove friction from the time to market? And DREC and the Stablecoin Studio are great examples of that. Guardian is, for the ESG market, is another good example of an accelerator. We actually built the Guardian before we called them accelerators, so it's an older version of this. But it's still important for us to continue building out these sort of layers on top of the foundational layers, APIs that are in the Hedera network, so that the developer community can build more cheaply and go to market faster, and that accelerates adoption of the platform.
Rakesh asks if R3 Corda and Hyperledger Fabric are going to use aspects of Hedera, such as HCS, into their CBDC projects. I'm sure that there's I don't even know if you could answer that one, but.
Well, okay, the truth is I can't. I mean, I know that we have built plugins.
Yep.
And that some are using those plugins. Personally, I'm not involved in the projects, and I don't know what's going on behind the scenes. That's not to say that there aren't people in our organization that are very familiar with what's going on behind the scenes. It's a big organization at this point. I know we're talking to them. We have relationships, pretty good relationships with those organizations, but in terms of the details, I don't know.
Well, I've got to ask, I mean, from your purview, what has been kind of the most exciting aspects of what you've seen over this year? And then for any forward-looking statements, what are you really looking forward to for the remainder of this year and then moving forward for Hedera?
The most exciting thing that I've seen, it's not just this year, it actually extends back into maybe sort of the middle of last year or early last year, is that enterprise use and adoption is accelerating, right? And now it's a theme in the industry. It's a theme in the industry. A lot of the big projects, layer ones, are focused on how they get enterprise customers. And this is where we shine, right? We have the council for exactly this reason. And so we have seen council members doing a lot of work and being engaged. That's another thing that's really exciting to me. Since Swirlds Labs was created, for the people that have been following the project, you'll know that we first decentralized governance and then we decentralized operations. And the last step of that for Hedera was the creation of Swirlds Labs and operations moving out of Hedera into Swirlds Labs. And then the council members had to assume a lot more decision-making responsibility. The committees had to step up then and take a stronger, more leadership role in everything related to Hedera. We see that everywhere now. It's a fundamentally different organization today than it was before we left. And that's been really gratifying. We took a leap of faith. You never know. You never know. You're giving up control and and influence, And in the belief that the council members are going to govern the way it was all designed to be governed. And it worked, right? And just sort of human nature is that if you want people to be engaged and involved, give them something really important to work on that they're responsible for, and their decisions are the decisions that are going to stick, right? It's their decision for whatever this important piece of process or activity, whatever it is. Give them control and they'll step up. And that's what we did, and it worked. And so that's, in the past year, that's been borne out in many, many ways. And that's one of the most exciting things to see, is that the council is mature, and the governance structure and everything that we put in place from the beginning has worked, and it's functioning the way that we designed it to function.
My last question is, I asked you this at Consensus when we were talking about,
Okay.
I know you're not gonna remember.
I don't know if I remember it.
But let me phrase it this way. I asked you about transactions
Okay.
and just the sheer volume that we saw shift over in 2023, right? And I think it was like $1 billion every 3 weeks or something like that. Back at Consensus, I asked, is that kind of a drop in the bucket moving forward? So outside of the transactions aspect, let me ask about tokenization.
Okay.
You can think about it. I think you mentioned Aberdeen and was it a 10 or 15 billion Lux Money Market Fund?
Yeah.
Not talking about like price expectations or anything like that, but as far as tokenization and value moving on chain or on Hashgraph,
right.
Is that kind of a drop in the bucket
for
what we expect to see?
No question about it. Let's just talk about this for a second. In terms of tokenization, it's I don't know how many trillion market, the size of the market is just unknowable. It's so large, right? And what's interesting is that if you look at the tokenization platforms that exist today, I'm not talking about the layer ones, right? Or the layer twos that are really just there, like we are, to enable developers to tokenize assets. It's still the case. There's a lot of friction, both from a technology perspective and a regulatory perspective, in realizing the vision for tokenization. And so we see these platforms that are being built on top of Hedera and other layer ones out there, and they continue, they're making progress, but it's through a patchwork of technologies and relationships. It's not the case that there is a single platform you can go to that's going to deliver a full solution for all of your tokenization needs. Sure. And there are a lot of reasons for that, and tokenization is a big category. There are lots of different types of assets that you can tokenize, etc. Anyway, the point is that we're so early in the mainstreaming of tokenization that we've only seen a handful of really meaningful projects. And they make headlines because there's only been a handful of meaningful projects, right? When you see a $15 million tokenization project be done 5 years from now, it should be a yawn. It shouldn't make the news.
Yeah.
And so I think that it's going to be, it is what's going to change the world. It is a killer application for the industry. It's also a major theme right now. I was just at Token 2049 a few weeks back in Singapore, and two of the main themes there was stable coins and tokenization generally, but certainly of real world assets. And so we're just on the edge, and there's still a lot of work to be done as these middleware solutions get built out and platforms that get built to make it easier, remove the friction from the process of tokenizing, and still a lot of regulatory work to be done as well. It's early days, right? And keep this in mind. It took literally decades for us to get where we are from the Web 1.0 and Web 2.0 perspective. It's going to take decades to realize the potential of Web 3.
Sure.
And so we're still early. It's very exciting. I think we're well positioned to really realize that potential here in Hedera, and it's fun. It's fun to be a part of.
Well, I have to say, from all of us at Genfinity, we really appreciate your time. Again, Mance Harmon, co-founder of Hedera, co-CEO at Swirlds Labs, and I know we talked to Consensus, now we're talking here at Hello Future Live, and I'm looking forward to the next one, sir. Thank you very much for your time.
Thank you.